with a fair amount of volumes. But overnight, the big news was crude prices having slipped to near three-year low, with Brent trading below $70 a barrel. This after the OPEC cut its demand guidance, and this for the second time in 2 months. Manisha joins in to tell us more. Manisha, what's up?
Oh, well, absolutely. Such a sharp decline continuing in case of the crude oil prices. You know, when you look at the last 2 months, which was July and August, the crude oil prices were trading in the negative. And September has begun on an even weaker note. 4% of decline yet again in the overnight markets, and we've broken below that very important psychological $70 a barrel mark for the Brent prices. And with that, we're trading at a 3-year lows right now. For the month of September, we are already down by 10%. And when you look at the third quarter itself, the crude oil prices are down by almost 18%. This is after the OPEC has cut the demand forecast for a second time in 2 months. Now, when you look at 2024 and 2025 as well, the OPEC believes that you could be looking at a lower demand at 2.03. This was 2.11 earlier, and this 1.7 was 1.78 earlier. So we have seen a demand decline forecast come in from OPEC. Apart from that, it also has to do with China. Every data that has come in from China has been on the weaker side. The crude oil imports for the month of August declined for a third straight month. And then you also have weak China consumption that has been going on for many months now. The EV demand, EV production and sales are now a 50-50% in sense of automobile fleet. And that also seems to be putting an impact. Apart from that, the Asia refinery margins also are at a multi-year lows, at lowest since 2020. And the analysts do predict that you could be looking at a potential oil surplus by the time you are in 2025, again weighing onto the prices. Well, the hurricane season is on, and that perhaps is the only thing that is giving some support to the prices right now. Otherwise, we have seen lower lows in case of crude oil prices. Franchai now is a Category 1 hurricane, is expected to make a landfall in Louisiana today. And before that, much of Gulf of Mexico, whether it's Shell or BP, have evacuated or partly shut their positions there. Well, Gulf of Mexico is an important area because 15% of U.S. oil production happens here, 60% of U.S. refining, and 2% of natural gas output comes in from Gulf of Mexico. So that bit of an opportunity buying that you are seeing right now in the Asian markets clearly comes in from this one. Apart from that, it is also going to be about the U.S. weekly inventory data that comes in today. But the API data yesterday suggests that you could be looking at a draw of around 2.8 million barrels. Those are a couple of factors which really seem to be supporting. But this is what the crude prices have done in this year until now. From the highs that we saw in the month of May, the crude prices have continued to decline. So from 91, we are trading at 69 right now for the Brent, and the WTI has gone up to $65. This is more than 20% of a decline from its highs. On textbook levels, the crude oil prices have gone bearish, slightly oversold as well in the way that we see for the month of September. So some support levels could perhaps be seen at these levels. Importantly, you have the US CPI numbers coming in today. PPI data comes in tomorrow, and that would set course of where the crude prices are headed for the very near term.
All right, Manisha, thanks a lot.